Before we start the video, I want you to subscribe to the best Telegram channel at the first link in the description, where we show our earnings on cryptocurrencies, and not only. Our capital that we manage is more than $3 million. Thanks for subscribing. Also in the description is a links to verified exchangers, when you register on which you get a welcome bonus from me. Let's get to the video. Friends, who do you think has lost $1 billion in the last 12 months? I'll give you a hint. Choose between Elon Musk and Mark Zuckerberg. Today I will tell you why Bitcoin's rise has stopped at 21,000, why investors no longer trust corporations, and how banks can collapse faster than the cryptocurrency market. It's happening right now and it's affecting our finances. Let's get to the bottom of it. Let's start with Elon Musk. I would like to point out that if the richest man in the world can be forced by a court to do something he didn't want to do, then maybe the court system does make some sense. Well, at least in some countries. Because Elon Musk, at the very least, wanted to knock off Twitter's price of $44 billion, but he was forced to do the deal at initial value. Now it's official. Twitter belongs to Musk. The deal is closed and the company's shares will be taken off the market because he bought them back from all shareholders at $54 apiece. They happily sold everything because they saw the prospect of a big collapse, like what's happening now with Facebook, Amazon, and other corporations, which we'll talk more about today. Elon wouldn't be himself if he didn't make a show out of what was going on. So in the Twitter office, he walked in with a washboard, which has been called a hint of firing employees. And heads have already flown. It is known that the CEO Parag Agrawal, Chief Financial Officer Ned Siegel, and Head of Security Vijay Gadde were deprived of their positions in the management. His actions, Musk commented with a tweet, "The bird has been released." According to rumors, the fired top managers received more than $200 million in compensation in the dismissal, and the CEO of the social network will become Elon Musk himself, at least for the first time. It's also very possible that Musk will decide to make Twitter a public company again in about 5 years. Various conspiracy theories are being constructed as to why he bought Twitter in the first place. They even suggest the option of helping Trump to become president again in the 2024 year. You, too, can offer your version in the comments. Here's what Elon himself wrote. He advocates for the world to have a platform for free communication, and he wants to build the most respected ad campaign in the world. I can't know what Musk is up to, but I can assess the current state of the markets, and if those who predict an intensification of the financial crisis are right, then in about 5 years we have a chance to see the return of an active bull market phase, and then we can have a Twitter IPO to quickly return the $440 million spent for its purchase and get a good profit yet. The main thing is that in 5 years, social networks are still relevant. And of course, it's worth mentioning Dogecoin, which is up 44 in the moment on this whole story. After Musk took over and amid rumors that the social network is working on its own wallet, everyone of course expects to start actively shoveling Dogecoin into Twitter. That put the idea of raising its price to $1 back on the agenda. Except that the market is still bearish, which kills any pump, and Elon Musk himself has not said anything about Dogecoin lately. We hope that he has not forgotten about Dogecoin, and pump will still happen. In the beginning of the video, there was a riddle about who lost $100 billion in 12 months. And the correct answer to it, Facebook CEO Mark Zuckerberg. There are important events happening in the stock market right now that have a direct impact on the price of Bitcoin. You and I recently discussed that the first cryptocurrency's rise of 20,000, and at one point we even touched 21,000, was due to a recovery in the US stock market, which in turn was triggered by rumors of first monetary policy easing. Both Bitcoin and the S&P 500 still have room to rise, at least until this election on November 7. But news has come out that puts that plan in great doubt. Number one is the script data, which is up to 0.6% at the end of the third quarter, above the forecast. This suggests that the recession is at least postponed until next year. And here and now, the Fed has reason to continue its tight monetary policy, which means there may not be any easing of the rate hike that everyone is counting on now. Number 2 is the blatantly bad reports of the leading tech giants like Google, Microsoft, Facebook, and Amazon. What's wrong with that? We can look at Facebook as an example. And yes, I know it's right to call this company Meta, but Meta in the Meta universe has clearly not caught on yet. The main problems are low subscriber growth, only 2% year-over-year. But at the same time, the company's taxes have gone up, expenses have gone up by as much as 19%, and advertising prices have also gone down by 17%. Much of the increase is due to investments in the development of the Meta universe, but they have not yet yielded the desired result. But Zuckerberg himself believes in the project and will invest even more money in it, although investors urged him, on the contrary, to reduce funding in this area and deal with already known projects, such as Facebook, not to let it finally die. But as I said, Zuckerberg is not the only one with a problem. This week, Google and Microsoft reported. After that, their shares fell noticeably on the background of weak forecasts for the fourth quarter. And yesterday, after the close of trading, the Amazon report came out, after which the stock made minus 12%. The reasons are the same: very modest earnings for the third quarter and extremely low forecasts for the next. The company is also going to cut costs. Taken together, this indicates that despite the return of its GDP to growth, things will not improve next year. It's only going to get worse. As a consequence, the Nasdaq index is now trading worse than the S&P 500 because tech companies have been the most affected by the current downturn in financial activity. And it is with them that the price of Bitcoin and other cryptocurrencies is best correlated, which led to the rate, again, sold 20,000. Another piece of news that is also important: the top 2 bank in Switzerland, Credit Suisse, got a sell-off of 18% yesterday, and in the last 5 years, its shares have lost 75%. There were already rumors about it that the bank was in serious trouble. The quarterly report confirmed it, because it showed a loss of 400 million. Credit Suisse is now going to borrow the same amount of money to rebuild the business and also fire 9,000 employees to cut costs. I can't help but joke that it turns out banks can fall faster than Bitcoin, and not only cryptocurrencies have big problems with high volatility, but overall this is not a good forecast. Because if more problems in the banking sector are added to tech corporations, then the stock market could get a panic sell-off and pull Bitcoin with it. According to Bank of America, Bitcoin becomes a protective asset, but this is a forecast for the future, and now, if suddenly the market collapses, Bitcoin will also fly to the bottom. And only after that, they will remember about it and start buying it in order to protect their money. Today we talked a lot about the stock market crash. Thanks for watching, your Cryptanic.